Hi, seniors, welcome back. I'm obviously not here today, but I do have some work for you to do since you have such few or so few days left of this school year. We need to get through a few things. So what you're going to be working on today is the chapter 14 mastery problem, and it's not new material. We went through it last week. You all should have watched the videos dealing with the content of chapter 14, and you should have done the work togethers for the chapter. But I wanted to get you started on this today, on your homework. I will collect this tomorrow at the start of class, so I do expect you to get it done. It will not take you the whole hour. If you do get done ahead of time, which you should, that will give some of you some time to finish up the chapter 14 reading guide, which was due on Friday, I believe it was, but a lot of you have yet to turn it in, and I would like that tomorrow as well. So, the chapter 14 mastery problem, this starts on page 386 in your workbook and page 440 in your text. Okay? On page 386, in your workbook, that is the first page of the worksheet. This is for a business called Carol's Closet, and it has the trial balance done for you. Okay. So it has the trial balance done for you. It has the instructions on page 440 in your textbook. The first thing we want to do on this is we want to check our trial balance and make sure that our debits equal our credits. Remember, the reason we're checking the trial balance, the reason we have that is to check our ledger and make sure in our ledger that our debits equal our credits. So under the last dollar amount, which is the federal income tax expense of $44,000, I'm just going to draw a single line underneath those first two columns, the trial balance columns. Okay? And we would add those up. I'm going to tell you right offhand, and this is a large number, the balance or the debit balance in the trial balance column, the debit total is $1,244,950.77. $1,244,950.77. And obviously our credit is also the same balance. The whole point of this is for our debits to equal our credits. So it's $1,244,950.77. Okay? So that's the very first thing that we do on the worksheet. We've transferred those numbers over from the ledger. We check to make sure that our ledger is good. Okay? Now, instruction 1 on page 440 in your textbook has us analyzing some adjustments. Okay? Now, you have to look at the wording carefully when you are doing adjustments. Adjustment A says that office supplies inventory is $1,407. Office supplies inventory, $1,407. So remember, when we're doing our adjustments, the first thing we need to do is we need to go to that account in our trial balance. So office supplies is on line 6, and according to our books, and these, remember, would be the numbers from the start of the year, January 1st, we have a balance of $6,128.25. So I'm just going to write that off to the side here. $6,128.25. According to this physical count that we did on December 31st, we have $1,407 worth of office supplies. So if we subtract those, we will find how much in office supplies we used this year. Okay, we started the year with $6,128.25. We now have $1,407. That means that we used up $4,721.25 worth of office supplies. That's how much we've used. Okay, that is our adjustment. So we need to get this number, $6,128 debit balance. We need to get that down to $1,407. So in order to do that, we'd have to credit it the difference, that $4,721.25. Okay, that will give us that balance of $1,407. That current balance is what is going to go over here in the balance sheet debit column. Okay? So we cannot have this credit of $4,721.25 in our adjustment column without having an equal debits. You always have to have equal debits and credits. So the account that we use opposite of our supplies account when we're doing our adjustments is our supplies expense accounts. And supplies expense, any expense tells you how much was used. So that $4,721.25 is going to be a debit there. Okay? So that's our first adjustment. Our adjustment B is our store supplies inventory. We did a physical count on December 31st. And that is $570.11. So we go up to our trial balance. I'm just going to erase what we had done there. And we look at our supplies store account. And according to our books, remember this was the balance from January 1st, the beginning of the year, we have $4,218.36. Well, we just did that physical inventory, and we now have $570.11. So we have to determine how much in supplies, store supplies, did we use up. Well, when you subtract those, you get $3,648.25. So we need to get this number down to the 570.11. So we need to credit that account to the difference, which is $3,648.25. $3,648.25. That's going to leave us that inventory count that we just did on December 31st, and that's what we're going to write in the balance sheet debit column. So that gives us a debit balance of $570.11. We can't have this credit of $3,648.25 without having an equal debit. So we go to our excuse me. We go to our supplies expense store account, and that is the account that we're going to debit that $3,648.25. Okay? And that's our adjustment B. For adjustment C, we did a merchandise inventory, and according to our book, or according to this inventory, we have $238,830.61 of merchandise inventory. Well, according to our trial balance, we have $229,282.36 worth of inventory. So our inventory count is actually larger on December 31st than it was at the start of the year on January 1st. So when that occurs, we have to then actually debit our merchandise inventory account. We have to get it from this $229,282.36 to the actual account that we have right now of $238,830.61. So the difference, or how much we have to increase that account, is $9,548.25. So that is going to be a debit adjustment for that merchandise inventory account. $9,548.25. And that will give us our balance when we carry this over to the balance sheet column. That'll give us that current balance that we have of $238,830.61. Okay? We cannot have this $9,548.25 debit without having an equal credit. Now, merchandise inventory does not have an expense account. Merchandise is not an expense to the business. So we have a temporary account to use opposite of that, and that is income summary, which is on line 28. So that's what we're going to credit that $9,548.25. Excuse me. Okay. So that is our third adjustment. Now our fourth adjustment, adjustment D, is for uncollectible accounts. And the adjustment in the textbook says that uncollectible accounts are 1.2% of credit sales, and we had credit sales of $458,200. So you take that $458,200 times 1.2%, or 0.012 in your calculator. That will give you the adjustment. We don't have to compare it to anything. That is the adjustment. So when we do that math, 1.2% times that $458,200, we get $5,498.40. That goes in the contra account, allowance for uncollectible accounts. So that $5,498 and 40 cents, that's going to go in the credit adjustments. Now I'm just going to carry that balance over to the balance sheet column right away. So we had this $155.25 credit balance already. We just credited it another $5,498.40. So that means we're going to add when we carry over. That's going to give us a credit balance, once we do that, of $5,653.65. $5,653.65. Now we can't have this $5,498.40 credit without an equal debit. That is going to be towards the bottom here, our uncollectible accounts expense. So that's going to be a debit of the $5,498.40. Okay, so that is our uncollectible accounts. So those are the accounts that we feel we're not going to be able to collect the money from that they owe us. So for our next adjustment, letter E, it says the value of prepaid insurance is $2,000. That's how much we have left of prepaid insurance. So we have to look in our trial balance column. According to our books, this was at the start of the year, we have $12,000 worth of insurance. We actually only have $2,000 worth of insurance. So that means we got to get this $12,000 debit balance down to a $2,000 debit balance. So in order to do that, we then are going to have to credit that account $10,000. Then when we carry over, that will give us that $2,000 value that we currently have. Okay? So what this $10,000 adjustment means is that we've used up $10,000 worth of insurance during the course of the year. So that debit for that adjustment, we can't have a $10,000 credit without a $10,000 debit, is going to be our insurance expense. Remember, expenses are how much of something we have used, how much of an asset we've used. Okay? So that is our insurance adjustment. So for F and G, these are estimates of depreciation. Remember, depreciation is the devaluation of an asset. So whenever it says the estimate of, that means the number they give you is the adjustment. You don't have to compute it. Okay? So we take a look. We have our accumulated depreciation accounts, which are contra accounts to the asset. So that, for letter F, the estimate of office account depreciation of $5,216, that is the adjustment. So that is going to be our credit adjustment, $5,216. Okay, we can't have that credit without an equal debit. So we go to the bottom and we have two expense accounts, our depreciation expense ones. So depreciation expense office equipment is going to be our debit of $5,216. Okay? We have to do depreciation also for our store equipment. And they tell us in that last adjustment, adjustment G, that our estimate of store equipment depreciation is $4,820. So accumulated depreciation office or store equipment in the credit column, $4,820. So we go to our depreciation expense store equipment, and that was the $4,820. Okay, so those are the adjustments we can do up to this point. We're not going to total up our adjustments because we do have one last adjustment to do. And if you remember, that is that federal income tax expense adjustment. But we can't do that until we carry everything over and determine our net income before taxes. So the next part of what you're going to do is you're going to start carrying over all the accounts into either the balance sheet column or the income statement column. So this is preparing us for creating our financial statements. Income statements show your asset or your net income, which is your revenue minus your expenses. Balance sheets show that your assets equal liabilities plus owner's equity. So your assets, liabilities, and owner's equity accounts go on the balance sheet. So to remember that, you have on your second page, dividends is the first one, and the second account is income summary. Okay? Income summary and down, all the accounts after income summary go into the income statement columns. Okay? Dividends go into the balance sheet, and everything on the first sheet goes into the balance sheet. So when we're carrying these over, cash is the first one, this $28,548.25 debit balance. We're just going to sort that into the balance sheet. Remember, we're not changing the balance, we're simply sorting it out. Petty cash, we're going to sort that out all the way down. Okay? Remember, when you're transferring balances, you have to look at the trial balance, and then if there was an adjustment, you have to take that into account before you transfer it. So you're going to transfer all of those on the first page over into the balance sheet. You're then going to transfer all of them on the second page except for the federal income tax expense. Do not transfer that over yet. Okay? So starting with income summary, we had a zero balance in the trial balance, but then we did a credit adjustment of $9,548.25. So that's going to go in the credit column. We had sales of $948,484.25. You're going to transfer that over. $948,484.25. Okay, so you will transfer all of those over to the except for federal income tax expense, and then you're going to determine your net income before taxes. Use the tax tables to figure out your income tax that you'd have to pay, and then you could transfer things over. Now, I created a sheet, a step-by-step sheet to help you with this, so make sure you look at that while you finish this up. As I said, you should be able to finish this up today, and then that should also give you some time to work on the Chapter 14 reading guide. If you have any questions, do your best to help each other out. Okay, certainly some of you know how to do this a little better than others, so help yourself out, but really do your best to get this done. We only have 8 more days, counting today, those of you that are seniors, and I want to get through this chapter and the next one, so it's very important that you get this done, and some of your grades definitely need it. All right, so that is it for today. Make sure you behave yourself, and I will be back tomorrow, and we'll go over some of these things. Okay? Peace out. Bye.